I spoke with Manishi Raychaudhuri of BNP Paribas in order to understand his outlook on the markets, where he sees potential value in terms of individual sectors, his view on earnings, as well as, of course, the fund flows into India versus other emerging markets. Well, Manishi is of the view that as of now, investors are likely extrapolating the synchronized recovery in the markets that we witnessed in the year 2020. In fact, he believes that a lot of the domestic investors are basically looking through this period and they are betting on a sharp post-COVID recovery. Do remember that we had seen that recovery play out after the meltdown, and he believes that this traction is continuing into the equity markets. That's continuing into the year 2021 as well, which is why investors are continuing to bet on this recovery. And if anything, the markets have proven that they are fairly resilient and they've been ignoring all of the on-ground reality signs with respect to COVID. Day after day, we've been seeing the equity markets scale new peaks and now are even quoting at around 15,300. When it comes to the overall earnings, Manishi Raychaudhuri is of the view that the consensus earnings estimates in banks look fairly overstated. He believes that the same theory can be applied to the consumer discretionary place, where the consensus earnings estimates in the consumer discretionary space are already overstated. When it comes to the tech space, he believes that techs look more geared up for the global growth cycle, given the kind of digital penetration that we've seen in the country. In fact, his strategy has been that he has moved from financials to the global cyclicals like IT when it comes to betting on India. Manishi Raychaudhuri is also of the view that as of now, there is a gap between value and growth, which has become fairly large in the country. There is a structural shift towards value stocks, and he believes that that currently is here to stay in India. He's also of the view that classic value sectors, the likes of materials, they continue to remain rather under-owned. A coordinated recovery from developed markets, according to Manishi, are likely to percolate into the emerging markets. In fact, when it comes to the fund flows, he believes that India is likely to attract fund flows in the long term. While there may be short-term volatility, for the long haul, he believes that the fund flows into the country will be robust. Purely expanding the fiscal deficit may not be feasible right now when it comes to the macros, and he believes that there's preference towards Indian IT, but only the top 3 to 4 companies. Deal wins from developed markets in the IT sector, he believes, are just starting to happen, and he believes that the mid-cap IT sector looks rather attractive for a broad-based structural recovery. But he believes that investors need to be very specific when investing in mid as well as small caps for the long haul.